Hello and welcome back to another strategy video. One of the simplest strategies that a trader can employ is the three candle strategy. The basis of the strategy is that three candles present themselves in the same direction, shows momentum switching in that direction. For example, if we get three bullish candles, in theory, bullish momentum is starting to take over. Obviously, the exact opposite is true for bearish candles. One important thing to keep in mind in this strategy is that the higher the time frame, the more likely there is validity to the signal. On the attached chart, I have a couple of areas that would have been interesting in the Swiss franc Japanese yen weekly time frame. The first yellow ellipse shows three negative candles that have a bit of range to them, and that's important because there was significant movement for the week. In this area here, we had three negative candles before, but they really weren't overly decisive. These 3 weeks show real strength to the downside. That would have been a signal that perhaps momentum is starting to pick up to the downside. At the second ellipse, we have the opposite. We have three very bullish candles and then a continuation to the upside. There are a couple of ways to play this strategy. One of the most common, though, is to use the range itself, break down below the range, in this case, shorting it, putting the stop loss somewhere right around 50% of the range, and taking the trade accordingly. The market, as you can see, did pull back, but it didn't stop itself out. That 50% gives it an opportunity to breathe a little bit, and then you can see we continued to the downside. Over here in the bullish trade, you can see that the stop loss would have been about here, but we hardly pulled back at all. Either can happen, and that's fine. The target of this particular strategy is essentially the same thing as the range itself. So eyeballing it, this three candle range would have had the market aiming for about here, maybe just a little bit higher. So you already have a 2-to-1 trade ratio, 1 unit here, 2 units here. Same thing over here. You would have had your stop loss here. You would have been aiming for about here. While this strategy does tend to be very simplified, it does give you an idea of how to trade with the momentum. Again, though, short-term charts like a 5-minute chart really isn't as reliable as a weekly chart. You can see in this particular case, these trades would have lasted several weeks, but in the end would have given the trader profits. Again, you want the first three candles. You don't want to just pick three random candles out of the middle of a trend. That being said, you can see that there have been several trades that have worked out on this chart, but it is somewhat rare to get three candles in a row. Even with this bearish pressure, we did not get three black candles. This allows you to get on the right side of the market if you were patient enough to take it.